Okay, welcome to today's class. This is a continuation of break-even point analysis, and which is under Cvp. So today we discussed previously about break-even point analysis and how we can use formula to compute for break-even point, and also use formula to determine targeted profit. So today we are going to look at multi-products. That is where a company manufactures more than one product. One of the assumptions of break-even point is there is only one product lines. Now, with this subhead, there is more than one product lines that the company manufactures, and this actually violates the assumptions of break-even point analysis. All right, so today we'll be looking at how you can determine the break-even point of a company where it runs more than one product. That is very, very important. Now, be that as it may, the existing formula, which we already know, would help in this aspect that we are going to look at. So we have contribution per batch. So now it used to be contribution per unit. So where the product has more than one, where the company has more than one product, is going to be contribution per batch, and it has a formula. Now we will designate each of the products using alphabets. So if the company has two product lines, it's going to be alphabet A will be product A, alphabet B will be product B. If the company has four products, it's going to be alphabet A for product A, down to D for product D. Now we actually prepared this note and class using two product lines, which is A and B. Now the contribution per unit of A times the sales mix of B plus contribution per unit of B times sales mix of B. You understand? Now we are going to be using CPU to mean contribution per unit, and we're going to use XM to mean sales mix. So should you see that subsequently? Now contribution sales ratio per batch, it used to be contribution sales ratio per unit, so it's not per batch. It's going to be contribution per batch divided by sales sales price per batch. That is what it's going to be. Look at it. Contribution per batch, contribution sales ratio is equal to contribution per batch divided by sales price per batch. Now how do you get your contribution per batch? It was computed above here. This stuff that you got using this formula is what you substitute here. How do you get sales price per batch? It's still the same thing. It is sales price of A times sales mix of A plus sales price of B times sales mix of B. So this is A. Sorry for that typo error. Good. So we have good. We have what we need. So now margin of safety, the same thing. Margin of safety is usually computed by saying actual sales revenue minus budgeted sales revenue. That'll give you margin of safety either in naira or in units. We did that last class. So the same formula applies, but it's not just going to be for per unit. It's not going to be per batch. which is actual sales revenue per batch minus break-even point sales per batch. So that gives you margin of safety per batch. Now, you already know the meaning of margin of safety. Margin of safety is the margin by which we are safe from making a loss. It tells us how many sales will fall short before we can cross the line of the break even. So, looking at margin of safety, the organization examines the extent at which they are safe from making a loss. So that is why it is very important in analysis that you consider it. Although for me, you don't need margin of safety to make a decision. So all these things are applicable in theory most often. So we have the models that actually works. Margin of safety is just to give us a clue of what things will look like. When we are trying to forecast, it can also at some point be useful. Now, revenue for each product. So we have break-even point in Naira divided by sales price per batch times individual sales prices times sales mix. So we're going to look at this. Don't mind the formula. By the time we take a question, you would understand better. So we have question 1. So PE Limited produces and sells two products, P and E. It produces and sells two products, P and E. Budgets are prepared for the next 6 months given the following information. For product P, selling price is 10 naira per unit, variable cost is 5 naira per unit. For product E, selling price is 12 naira per unit and variable cost is 10 naira per unit. Common fixed cost. Production and selling for 6 months is 561,000 naira. You are required in respect of coming 6 months to state what the break-even point in naira will be and the number of each product. This figure represents if the two products are sold in the ratio of 4p is to 3e. To state the break-even point in naira value and the number of products, this figure represents if the sales mix changes to 4p to 4e. Now, I'm going to focus on one because if we get it right, you can actually get the rest right. So we have solution. Now we have the break-even point in naira is FC divided by contribution sales ratio per batch. Now the FC was actually given to us in the equation, and we have this. Look at the FC, 561,000 naira. So having this FC is important. You don't need to stress to get them. So what you just need to do is to compute for the contribution per batch using the formula that we discussed earlier on at the inception of the class. Now, contribution per batch is equal to, let's look at it. Contribution per batch is equal to the contribution of A times sales mix of A, the contribution of B times sales mix of B. Now, the contribution of P is 5 naira, which is 10 naira the sales price minus the variable cost of 5 naira. For E, the contribution is 2 naira, which is 12 naira minus 10. That gives you 2 naira. Now, the sales ratio was given in the equation, so we can go back and look at it. They said two products are sold in the ratio of P is sold 4, while E is sold 3. So the individual contribution per unit to be multiplied against 4P and 3E. I hope that makes sense to you. So in that regard, then we move on to the next thing. So having gotten our contribution per batch to be 26, you can now compute for your break-even point in naira, which is the fixed cost, which is 561,000. You understand? Divide by the break-even point per batch. Okay, now I haven't gotten our break-even point. We want to get in naira, sorry. So you divide by contribution sales ratio per batch. Now we have our contribution. You now get your contribution sales ratio per batch, which is contribution per batch divided by sales price per batch. So the sales price is simple. The sales price times the sales mix. So the sales price of P is actually 4, while the sales price of P is 10, while the sales price of E is 12. So their ratio to sales is 4:3. So you multiply the one of P by 4, you multiply the one of E by 3, so you have this value. So this becomes our sales price per batch. So with this sales price per batch, you can divide the contribution per batch by sales price per batch. That gives the contribution sales ratio. So I haven't gotten contribution sales ratio per batch. So you now come and get your answer, which is this divided by this. You have 1,641,600 naira. How that makes sense to you? So you would see and observe that we have a break-even point of this value. So for us to break even, we must make a sales that is equal to this value. And recall that at the point of sales, everyone knows, that total cost is equal to total revenue, as the case may be. So we move on to the next thing, which is we can actually get our break-even point per batch. Is total fixed cost divided by the contribution per batch, and contribution per batch is 26 naira. So divide this by this, you have your break-even point in units to be this value. So the break-even point per batch in units is actually 19,886 naira. 869 naira. So this is what we have. So with this, you can compute for the break-even point in naira for each product. What do? Bring in the break-even point in naira for the batch, divide it by the sales price per batch, multiply it by 40. How do you get 40? Is actually 10 naira sales price, multiplied by 4, which is the ratio of sales, that gives you this value. Same here, you have what you need. So this is how computation is done for multi-product companies. So this is good. You can look at the remaining in the notes that I will upload. I think is self-explanatory for your understanding. So I would like us to also visit another question. There are 2 ways this multi-product thing are solved, but we're just going to look at, I think, one here, as the case may be. Now, X Limited has budgeted fixed overhead of 6 million naira for the next period. This deals with budget. It deals with budget. Now, since it deals with budget, we are looking at this for the next period. So X Limited is preparing a budget to sell 3 products. So we have sales volume. The 3 product lines are P, Q, and R. So the sales volume is 10,000, 6,000, 4,000. The sales mix is 10:6:4. So the 6 mix as percentage is 50%, 30%, 20%. The sales price per unit is 250, 400, 1,600. Budgeted revenue is 2.5 million, 2.4 million, 6.4 million. The contribution per unit is 150, 250, 800. Budgeted total contribution is 1.5 million, 1.5 million and 3.2 million. Calculate the number of units that X Limited must sell in order to break even and calculate the total revenue at that point. Now, solution. The CPU is this is actually fantastic. Okay, oh sorry, fantastic is not an English word, but this is actually interesting. I used table to buttress my point here for my students to have a good understanding of what I'm actually trying to communicate. Now, remember that for you to compute contribution per batch, you have a formula which we looked at the inception of the class, and that formula is contribution per unit multiplied by sales mix gives you contribution per batch. That was what we said. So we want to get the contribution per batch using this table. So these are the contribution per unit which was given to us in the above question. You can say it. This is contribution per unit in naira. So this is 150, this is 250, this is 300. Now we have this value which is 150, multiplied by 10 gives us those values. So at the end of the day, we have a total contribution per batch of 6,200 naira. So with this, we can get a break-even point in units. It will now be fixed cost divided by contribution per what? Contribution per what? Per batch, which we got already to be 6,200 naira. So with this given, we have a break-even point in unit is 968. This implies that for us to break even, we must sell the 3 lines of product to the total number of 968 units. Now we want to get the sales batch as it stands now. How do we get the sales batch? That becomes one of the most interesting thing here. So the sales batch is still easy using the same formula. It will be sales price per unit multiplied by sales mix. That gives us our sales batch. You understand? So the sales price for P is 250. The sales price for Q is 400, and the sales price for R is 1,600 naira. So when you multiply by the sales mix which was given in the equation, you would have these values, and at the end of the day, we're going to have a sales a price per batch of 11,300 naira, which is important at this point in time. So we now compute our break-even point in naira to be fixed cost divided by contribution sales ratio per batch. Now, before you impute these values, you must have them handy. Now, the fixed cost is here handy because we already made use of it, and end-to-end things about it. Now we need to now determine our contribution sales ratio per batch, and the formula is easy to get, and it is total sales price per batch divided by sales contribution per batch divided by sales price per batch. So we have this solved here, where we said that is, look at it, not before, that contribution sales ratio per batch is equal to 6,200. So we now have this particularly, you understand? So we have sales price and contribution per batch divided by sales price per batch. So that gives us 55%, which is this. So having gotten this as our stuff, we now come and substitute in the formula. So we are actually having a revenue of 10,935,000 naira. as the case may be. So that is that for that. Now, it's important that at this point, I vehemently believe that you have a perfect understanding how break-even point for multi-product lines are computed. So on this note, I think I will bring the class to an end, then send the materials across to you. You study the materials, listen to the class, and do not forget that you can at all time come back and re-listen to this class again. Thank you for attending.